Hello friends, welcome back to my YouTube channel. In this video, I want to tell you about the case, Martin Armstrong's investment fraud. Martin Armstrong is a former financial advisor and economic forecaster who gained attention for his economic predictions and theories. However, he was involved in a high-profile investment fraud case known as the Martin Armstrong investment fraud case. Here's an overview of the case. Martin Armstrong founded a company called Princeton Economics International Limited, PEI, in the early 1980s. He gained recognition for his economic models, which he claimed could accurately predict the rise and fall of financial markets. Armstrong's company attracted numerous high-net-worth individuals and institutional investors who sought to benefit from his predictions. In the late 1990s, it was revealed that Armstrong had been operating a Ponzi scheme through his company. He had been using new investors' funds to pay off earlier investors, rather than generating legitimate returns through his economic forecasting methods. This fraudulent activity went on for years, and it is estimated that Armstrong misappropriated hundreds of millions of dollars from investors. In 1999, the U.S. Securities and Exchange Commission, SEC, initiated an investigation into Armstrong's activities. The SEC accused him of securities fraud, misappropriation of funds, and manipulating the markets. Armstrong was subsequently arrested and charged with various criminal offenses. Martin Armstrong's case went to trial in 2000. During the trial, he argued that his economic models were legitimate, and that he genuinely believed in their accuracy. However, the jury found him guilty on multiple counts, including securities fraud and conspiracy. He was sentenced to 5 years in federal prison. After his conviction, Martin Armstrong continued to fight his case, filing numerous appeals and claiming that he was being unjustly persecuted. He alleged that his economic models were of great value to the government, and he refused to cooperate with authorities, which led to additional legal complications. Armstrong's legal battles continued for several years, but ultimately, his appeals were unsuccessful. Martin Armstrong was released from prison in 2011 after serving his 5-year sentence. Following his release, he has continued to share his economic and market insights through his website and writings. However, he has faced criticism and skepticism due to his past involvement in investment fraud. As of my knowledge cutoff in September 2021, there is information available regarding Martin Armstrong and his investment fraud case. However, please note that I cannot provide real-time updates or information beyond that date. Martin Armstrong is an American former financial advisor and economist who gained attention for his economic forecasting models. In the late 1990s, he operated a company called Princeton Economics International Limited, PEI, and was known for his predictions on financial markets. In 1999, Martin Armstrong was charged with securities fraud by the United States Securities and Exchange Commission, SEC. The SEC accused Armstrong of running a Ponzi scheme through his company, PEI, and misappropriating funds from investors. The allegations included providing false statements and reports to clients, as well as using investor money for personal and unrelated business expenses. In 2000, Martin Armstrong pleaded guilty to securities fraud and was sentenced to 5 years in prison. He also agreed to pay restitution to his investors. The case attracted significant media attention due to Armstrong's economic forecasting reputation and the scale of the fraud. Martin Armstrong is a former financial advisor and hedge fund manager who gained notoriety for his involvement in an investment fraud case known as the Martin Armstrong Ponzi scheme. Here's an overview of the case and an example of how the scheme operated. Martin Armstrong operated an investment firm called Princeton Economics International Limited, PEI, which he founded in the early 1980s. Armstrong claimed to have developed a computer model, known as the Economic Confidence Model, ECM, that could predict market cycles and investment trends. Armstrong attracted investors by promising high returns based on his ECM predictions. He convinced clients that he had a unique and proprietary system that could accurately forecast future market movements, making his investments seemingly low risk and highly profitable. Here's an example of how Martin Armstrong's investment fraud scheme operated. Promise of high returns. Armstrong approached potential investors and promised extraordinary returns on their investments. He marketed his computer model, the ECM, as a revolutionary tool that could predict market cycles and generate consistent profits. False claims of success. Armstrong presented historical data and charts that seemed to support the accuracy of his ECM predictions. He boasted about his past successes, claiming to have made millions for his clients using the model. Lack of transparency. Armstrong maintained control over his clients' funds, rather than utilizing an independent custodian or third-party institution. This lack of transparency allowed him to manipulate the investments and misappropriate client funds. Ponzi scheme structure. Armstrong used the funds from new investors to pay returns to existing investors, giving the impression of successful investments and generating trust in his abilities. He continuously attracted new clients by showcasing the apparent profitability of his model. Fabricated account statements. Armstrong sent account statements to his clients that showed consistent gains, further bolstering the illusion of success. These statements were often falsified to reflect fictional profits and hide any losses. Avoiding scrutiny. Armstrong used complex financial structures and offshore accounts to hide the true nature of his activities. He created a web of international entities and moved funds across various jurisdictions to make it difficult for regulators to detect his fraudulent activities. Unraveling of the scheme. In the late 1990s, suspicions began to arise regarding Armstrong's operations. Eventually, regulators and investors started questioning his claims and demanding their funds. In 1999, Armstrong was arrested and charged with securities fraud, conspiracy, and contempt of court for refusing to comply with court orders. Legal consequences. Armstrong was found guilty of securities fraud in 2007 and sentenced to 5 years in prison. Additionally, he was ordered to repay over $80 million to his defrauded clients. Armstrong served his prison sentence and was released in 2011. It's important to note that the example provided above is a general overview based on the known details of the case. For more specific information and comprehensive understanding, it is advisable to refer to official court documents, news articles, and investigative reports regarding the Martin Armstrong Ponzi scheme. Subscribe to the channel for more such new videos. Thank you for watching.